The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Time now for chart of the day. As markets reporter Dominic Dantes reports, Bitcoin continues to be range-bound. The cryptocurrency is stuck, he says, in a tight range between $46,000 at the support level and $50,000 resistance, and it's roughly flat over the past week. The relative strength index is almost oversold, according to this 4-hour chart. Dominic believes the consolidation phase is likely to persist this week as the August 6th price breakout above 42,000 appears to be a little on the exhausted side. Okay, joining us now to discuss the Bitcoin market is Jeff Dorman, Chief Investment Officer at Arca. Hey there, Jeff. Thanks for joining us.
Absolutely. How are you?
Doing pretty well. Hope you're doing well as well. So, look, I mean, we got a bit excited. I think it was last week. Bitcoin got over 50,000. I was struck memories of the days when the Dow got through 10,000 all those years ago, and then we had to throw out the Dow Jones caps that I was working at the time and come back again and revisit it. The fact that it hasn't managed to consolidate over that level, is that a good sign, a bad sign? What's your take on the failure to keep heading higher?
I think it's a bad sign only in the sense that there's a fair amount of technical analysis investors out there who are just expecting it to get above 50,000 and then break out and be off to the races for the rest of the fourth quarter, just like we were last year. But outside of that near-term movement, it really doesn't matter. I think there were a lot of positive factors for Bitcoin specifically in the last few days here that really failed to create price action, but that doesn't mean we won't find new factors in the next few weeks. Things we were looking at was we had a very large options expiry on Thursday last week. We expected that to be led or to follow rather by a lot of call buyers rather than the typical call sellers that we see that usually suppresses vol. And we saw that. We saw a lot of big call option volume going through on Thursday into expiry and as well as on Friday heading into the weekend. And it really didn't do much in terms of Bitcoin pricing. You also had Jackson Hole, right? The Fed was fairly consistent with their views that tapering is fairly far away from now. We're not going to have interest rate rises anytime soon. We saw a real risk-on rally everywhere else in the market. The VIX collapsed. Equities were higher. We saw Treasury yields lower. The dollar was lower. That should have been very bullish for Bitcoin and other risk assets, and it really was for everything other than Bitcoin. And now you also have the month-end flows. This is becoming more of an institutional market, which means you will see positions start to move probably over the next 5 hours here into the end of the month, and also into the first few days of the new month as funds start to get new inflows that they put to work. So there was a lot of bullish factors that should have led to a more Bitcoin interest, and it just isn't happening right now.
You just described that there was an institutional market, and clearly at the beginning of the year, that was the big driver, the arrival of the institutions. So by that, we really mean the sort of, I suppose, non-crypto native institutions. Heard anecdotes that they're still there and still interested. And what's your take? Are they there, or are they waiting for the next opportunity? Is this just a lull? Are institutions truly coming in or not?
I think the institutions are absolutely coming in. They're just not coming into Bitcoin. Bitcoin, we've said this on your show in the past, Bitcoin to us is just a binary option. It's either worth zero or it's worth probably $1 million per token. And everything else in between is largely just sort of noise and trading functions on a path to getting to one of those two extremes. I think going to zero is incredibly unlikely. I think heading towards $500,000 to $1 million a token is much more likely. But that might take 20 years to get there. And if you're going to compare Bitcoin as digital gold and compare it to gold, well, not that many institutional investors care that much about gold either. So you can't expect them to be sitting here on pins and needles looking at Bitcoin every minute of every day. They'll come in when there's a catalyst, and they'll sit on it and hold it for a while. But they're just not actively participating as much as they are in parts of DeFi and NFTs and gaming and the other sectors and other areas of the digital asset economy that have more frequent relevant news than Bitcoin does, right? Bitcoin's a long game. Everything else is happening weeks at a time.
Okay. In that case, perhaps the El Salvador news that we were just discussing, these sorts of issues, would you see that as being relevant to the price of Bitcoin or not? Is it sort of like everything comes down to this big, 20-year play rather than the developments on a day-to-day or week-to-week basis?
Yeah, I mean, I'll tell you exactly how relevant it was. I manage $500 million across multiple funds, including exposure to Bitcoin, and I didn't even know that news until 5 minutes ago when I saw it on your show. So, no, I don't think it's that relevant. I don't think it's a data point that is going to move the needle one way or another. I think, each new entrant to the market is news. When we saw corporate treasuries buying for the first time with MicroStrategy, that was news. Thereafter, not that interesting. Right, when El Salvador came out and adopted Bitcoin, that was news the first time. Thereafter, not that interesting anymore. So each time, I think when the first insurance company came in and bought Bitcoin, that was news. When subsequent insurance companies come in, no one's going to care anymore. So I think this idea that you're going to move around $1 trillion asset because of one data point or one piece of news, it's just not that practical.